Hi guys, welcome back to another video. So let's have a look at Goldfinch or GFI today. So this coin has been slowly crawling up, as you can see here, after hitting a new low of 59 cent, and as of now it's up 73 cents. So that's pretty good, I would say, price action, and this is in a clear uptrend. As you can see here, this was making it went up and it went down. Of course, the investors, the traders are most likely taking a profit. Again, it's up, and as of now it's actually going up. So let's have a look at it and see what it offers. So if you are not familiar with GFI token or the Goldfinch protocol itself, this is how, or this is what it is. So they have Goldfinch Prime, and they have their legacy app, which is this one. So basically, if we just go to, so Goldfinch is a decentralized credit pool protocol that allows for crypto borrowers, crypto borrowing without crypto collateral, with loans instead of fully collateralized off chain. So this is the biggest, I would say, prime product, which is the world's leading private credit fund on chain. So as you can see here, they have over 1000 plus loans, and the yield is pretty high. But of course, these two tends to have some risk as well, so that is going on. So basically, this is one of, I would say, one of the very strong, RW protocol that has been actually doing pretty good. Now again, this is unlike others. This tends to have a pretty good risk. So because of that, it is, I think, if you look at the tokens demand, it's not that much. Now looking at the token itself, GFI is only used for the governance, and it can be used for the liquidity pool here on the legacy app, but it does have a limited, I would say, utility. And because of that, the demand for the GFI has also gone down, at least that's what I think. Now there is a chance that the GFI token could actually have a pretty good demand as soon as their private credit fund growth, because if we look here, if we look at the management fees, there is a 1% total management fee, out of which 0.5% goes to the protocol and the 0.5 goes to the pool manager. Now the protocol gets the fees, and if we look at their treasury is pretty hard. So if we just go to the treasury, they have over, I believe, okay, so let's see, they have over 15 million in treasury, which is a lot, of course, out of which mostly is GFI token. But again, this is a massive treasury, and I think as soon as the Goldfinch Prime grows, the treasury will grow. And who controls the treasury is the community, and that is through the token itself of GFI. So GFI has a max supply of 114 million, but it is there is no inflation as of now, but community can decide if they want to add that inflation or not. So that is something that you should know. So this was the initial allocation, and as of now most of the token are in the market. So I think that's pretty good for the token itself. Again, it's still around, I would say, it's still around 20 million tokens have yet to come out, but again, I don't think that is going to matter that much, because the token has already seen a massive sell pressure. If we just look here, so this is how it actually ended up hitting over 300 million at the peak, and as of now it actually ended up hitting 45 million, and as of now it has started to recover again. But I think this limited utility of the limited utility of the token is one of the reasons why the token is not doing that well. Looking at their product, they seems to have a solid product. You do need to actually do the KYC, and if you don't do it, you won't be able to use it. So that is a big hurdle. So users who actually don't want to do KYC, they won't be able to use it. So that is a biggest, I would say, hurdle that the token is facing as of now, or the protocol itself. Now if we look here, these are the sectors different sectors, and these are the different. I'm not going in depth on what it is. It is a little bit complicated, so if you're interested you can actually check them out, but today we are only focusing on the token itself. At least the minimum deposit is around $100, so that's pretty good, I would say. Now let's have a look at the token itself and how it can do. So this is how it looks like. As of now, it is actually trying to break 200 EMA on the 4-hour chart, as you can see here, and again 200 EMA is a pretty strong support. So if we just look here, okay, so this is how it looks like. So at first it was actually trading above 200 EMA, and it actually used it as a support here, as you can see here. So it was actually support here, and after that again it was actually support here, but right after breaking 200 EMA the price just went down, and actually again it tried to break the 200 EMA. It was not able to do it again here as well, and now here as well. So as of now, I think if it breaks 200 EMA and manages to close above it, there's a high chance that the token actually could see a pump like this that it had back here back in the day. So it actually went from 200 EMA, it actually had a massive pump of 70%. So again it went right back at 200 EMA and it went back up again. So I think as of now what it needs to do, it actually needs to break above from 200 EMA. So if we do see a breakout from here, again it is a pretty strong resistance, as you can see here. It is actually using 200 EMA as a resistance, so if it goes down as of now, that is very much possible. But again it is making new highs, so I think there is a chance that the token will most likely go higher. Again, still the market as of now is not doing that well, and the Bitcoin is just at one trading around here, so I'm still unsure. But again, if I think it breaks from here, there is a high chance that the token will most likely go high. So let's just say that it breaks out from here. So I think there's a pretty good chance that the token could actually run as high as $1, and if there are more traders in the market, the token could actually run as high as 1.2 as well. That is just a short term, I would say, price action, but again for the long term it is really hard to say how it will do. But still, if the price rejects from 200 EMA and continues to go down, there is a high chance that there will be a pretty good accumulation happening around here. So this also seems to be a pretty good buying zone for the token itself, around 57 to 44. So if the token does go down, I think there is a pretty good chance that it will actually most likely rebound from here or rebound from here. But as of now, I think it just needs to break and at least go up. So let's just say if we look at the daily chart, it has its 200 EMA is around $1. So I think if it does go up from here, there's a high chance that it will reject at $1. But I think that's still a pretty good pump. Let's see what happens. But again, it does have a pretty good accumulation zones back here as well. So the first one was around 44 cents, and the next one is this one. So I think if you are interested in this coin, you can actually dollar cost average it from 58 cents to 28 cents, and you can sell it as it goes up. But I think I think this is a pretty good zone for the coin, and it should actually go up from here. Anyway, this was it. I hope you liked the video. I will be back more. Thanks for watching.